It's time for In the Money, Stock Market Action on AM 820 News. Here's Chief Market Strategist Gareth Soloway from InTheMoneyStocks.com.
Good afternoon, everybody. Great to be with you on this Sunday, April 13th, 2014. It's truly a pleasure as we continue to rock and roll and nail this market every which way. And again, I hope some of you have been taking heed as we've talked in the previous couple months about moving to the sidelines, moving to cash, and actually starting to trade this market a little bit more actively so you can make money on the bounces, make money when the markets fall. And ultimately, last week was a rock star week. I gave you guys calls last week to buy at certain levels. Those stocks that hit those levels bounced big, and ultimately then we headed back down. And that's what you want to do as a swing trader. And swing trading is the new thing. It's the thing that every investor needs to be doing. So we're going to discuss a little bit about that today. We're going to talk about what happened in the markets last week, where this market is going, and ultimately what do you need to know to make money. Today, I am joined by a special guest, my business partner at InTheMoneyStocks.com, Chief Market Strategist Nicholas Santiago. How are you doing today?
I'm great, Garrett. Thanks for having me today.
Oh, my pleasure. It's great to have you and your insight as well. So really today, what I want to do first and foremost, let's talk a little bit about last week, and I just want to go over the price action on a day-to-day basis. And I said this last week, it's important to understand the internals of the market because I think you get a good sense. You kind of have to get the feeling of what the market is doing to be able to tell what it's going to be doing in the future. And this is something I found out a while back. You know, if anyone's ever been a trader out there and you go away for a couple months, you almost have to come back and sit and kind of just watch the market for a couple days to get back in the swing of things. Otherwise, you kind of a fish out of water. You don't know, what's going to happen. You lose that touch. So that's why we always go over the market in the past, few days to give you guys that sense so you're really in tune with what's going on. So let's go back to Monday. So coming into Monday after last week's show, we said, listen, you got to be careful. I said that flat out. I've been saying it for months that the distribution has been occurring. We've seen a market that has really remained near the all-time highs, even occasionally making a new brief all-time high. But every time it does, it gets sold into. And that was what I was saying. It's just clearly institutions saying, listen, the small buyers coming in here because there's a lot of bullish sentiment out there, and we're just going to sell right into those people. Ultimately, guess who's going to be the bag holder? The small investor, just like always. So we've seen that, and I've told you that. I mean, I've told you that since this show started in January, and we've seen it again and again. So going into this week, you had to expect downside, but I did give you a couple stocks to watch that if they hit these levels, you should be a buyer of. Okay, and again, what we talked about last week is don't get greedy on them, though, because the market net is going down lower. So buy, hold for 5 to 10% gain, and then move out. Now, to most of you, 5 or 10% gain is something you make in a year. Well, guess what? Here at InTheMoneyStocks.com and on In the Money Stock Market Action, we make this in a day or two or a week or so. And that's what we like to do, make money. So what we did was LinkedIn was one of the calls I gave out at $160. It hit there. It actually went a little bit lower briefly, and then it bounced to $177 for about a 10% gain. That was one we gave to our research center members at InTheMoneyStocks.com. Netflix, $335 was the entry area. That bounced to $357, about a 7% gain before starting to pull back and going lower. And one that I didn't give you guys last week, but I gave members at InTheMoneyStocks.com was Pandora, which we bought and sold in a day for 10% profit. All right. And again, in and out is what you're going to do if you're going long. Now, it's funny because the other side of the coin is the average investor is programmed to buy and hold for a long period of time on the long side. I take the opposite approach. I know Nick does as well. You got to, in this market, if you're going to be going long, you're in and you're out. Now, if you want to be short, we honestly feel you could probably be short for a longer period of time because that's the overall directional change in this market. So in any case, bottom line is Monday we saw more downside. That gave us the entry on a couple of these positions. Tuesday was more of a flat day. Wednesday we saw a big gain. Now, interestingly enough, on Wednesday we got the FOMC minutes at 2 o'clock. Janet Yellen and crew were out making sure this market had the most dovish report. Basically what they said there in those minutes was that the jobs number, remember they had a target for jobs, so the unemployment report, if they originally it was 6.5%, I believe, that at that point they would start to raise interest rates. And needless to say, we've gotten there and they haven't done that. So they removed that whole part of the equation. They said, listen, 6.5%, that has nothing to do with anything. We're just going to go with the flow and do what we want. Market loved that initially and rallied up the rest of the day on Wednesday. We had this big gain. The small investor was thinking they were in the money. This is where ultimately we were taking profits on our long plays, and it was almost like the markets were going to go right back to their high. Well, they didn't. Markets saw a major downside on Thursday. NASDAQ was down 3%, I believe, right around that 3% level. We saw the biotech index get slammed again, which has been kind of the leader. And that's something I think we'll talk about with Nick in a little while. The biotechs, they were the leader going up, and now they're the biggest faller. And I think it's important for us to note that and kind of talk a little bit about how they started to fall before the market fell. So it was a great leading indicator if you were aware of it. I mentioned it on this show. So you could have been aware of it and used it to your advantage. Friday, the markets again sold, although it wasn't a big sell. Well, I guess big being relative. If you look at the indices, Dow down 144, NASDAQ down 54, and S&P down 17. But to me, when you see the NASDAQ down 54 after being down 120, that's not that big of a drop. In any case, that's last week's action. The one little note that I also want to talk about with Nick today is the PPI report on Friday. I thought was very interesting because it's very rare you see a core number at 0.6%. I mean, that's a lot of inflation, and that's not even including food and energy, which they always like to exclude because it kind of shaves and gives us what they call a false sense. But I think Nick and I would both agree that the PPI number is most important to include that food and energy number. In fact, Nick, I'll kick it over to you. What do you think about the PPI? I mean, is there inflation out there? Is this something that could tie the Fed a little bit in terms of keeping the free money policy going?
Sure, there's inflation. I mean, just look around the world and look at food prices. As you said, they exclude that. But, I mean, that's the first sign that there's inflation about to erupt. The Fed is dying to have inflation because they're trying to ultimately fight deflation. Deflation, which a lot of people don't understand, is really products like your iPad will become cheaper, but products that you need to survive, like a food or any kind of something to drink or eat, is going to explode to the moon. And we're starting to see that. I mean, prices for meat products are outrageous right now. Gasoline, just look at gasoline at the pump now. I mean, it's getting more and more expensive again. This all eats into the consumer. The consumer spending accounts for roughly 70% of the U.S. GDP, gross domestic product, in the United States, and this is problematic. The Fed really has their hands tied here. They must continue to taper, and they must start to raise interest rates.
So the Fed has always said they want like a 2% inflation kind of gauge. But do you think if they get that too fast, it'll make them? I mean, at some point, if you're getting too much inflation, you've got to raise interest rates and you've got to stop printing money, right?
Absolutely. But look where food inflation is right now. It's probably at 15 to 20%. Yeah. So these guys have distorted the markets for so long. They're really just in. I just think that people now. I'm talking about a sophisticated investor is starting to realize, and you see it in the market. We're seeing it now, and we've called this top perfectly. But you're starting to see the institutional investors say, "Hey, these guys don't have a clue," and then once they lose faith in them, watch out.
Yeah, I think that's so important to understand, folks, and that's something I mentioned last week. We talked about how when Janet Yellen came out, remember she had her press conference a few weeks ago and said, in a year we're going to start raising interest rates. And then last week, 2 weeks ago now technically, she came out and said, I was kidding about that. Don't think about that. Because remember, the market tanked on those initial comments. So she kind of backtracked. And I thought it was very interesting because interest rates honestly didn't move that much. I mean, you saw a little bit of a wishy-washiness there, but it wasn't like you saw a dramatic result from her comments, as opposed to 2 years ago, you would have seen a major move in some of those, the 10-year yield and so forth. So we talked last week about, is the Fed losing their edge? Are they losing the kind of the trust of the markets? And Nick, are you thinking that's happening now?
I honestly 100% believe it is.
Wow. So I think that just goes to the issue of if their confidence is waning, what small investors, what institutions want to buy this market at this point? Now, again, having said that, yes, Nick and I think overall believe the market has more downside to go, but that doesn't mean, and I always stress this because I think people see us in black and white. They say, they're saying the markets are going to go down, and what Nick and I are really saying is that the grand scheme is lower, but you have to remember you can make money still if you find the right chart setups, just like last week. I mean, I think last week was about as good an example as you could have where levels were hit that I used the PPT methodology, which we created here at In the Money Stocks, to find. and we got 10% bounces out of them in a matter of a day or two. And then we were smart enough to say, let's not get greedy on this, move out of these plays because we know the overall move is down. And then sure enough, these stock prices came down. Good example was Pandora. In a day, 24 hours, in and out for 10% profit. And then the stock tanked and went way below where you originally bought it. Now, someone might out there say, well, is it a buy now? The answer is not yet. There are levels below that it'll be good, which we'll talk to Nick about. In fact, Nick, do you have any ideas on Pandora?
I actually do.
Nice.
I'm looking at that 2250 level, 2260. That's a spot where traders can get involved for a quick bounce again. You have to be able to pick these levels precisely. If you're not astute at our methodology, it's going to be very, very difficult for you.
Oh, that's a beautiful thing, and that's what it comes down to, guys. I think the institutions, we'll talk more about this a little bit later, but the institutions go left and right. They're going to be long the market. They're going to be short the market. They've put out that feeling that, being short is a negative thing. You're betting against the economy, blah, blah, blah. That's nonsense, honestly. That's flat out nonsense. They just want to be the ones that are selling to you. They don't want you guys shorting the market, because then how do they short the market? I mean, they have to be able to sell into someone who's buying, and if everyone else is shorting with them, they're not going to have that angle to the market. I mean, what do you think about that, Nick, in terms of the kind of the game out there that's played?
It's 100% true, Gareth. You make a great point. Just look at the gold market when it was upgraded by J.P. Morgan a week before it topped out. Look at Look at Apple Computer right around $700 a share. How many upgrades it was getting? These guys are not foolish. They're smarter than that. Who would upgrade a stock at that level? They're trying to sell into the public. I mean, that's basically what it comes down to. And I got news for everybody. Next week is options expiration. And you're going to see a lot of upgrades and downgrades during the week of options expiration, the monthly expiration for the month of April. There's a lot of upgrades and downgrades that are just totally ridiculous because they need to sell into somebody. They need that small retail options trader to have their contract expire worthless. The game goes on, and we're here to expose it.
Yeah, that's great to say, too, and it's what we're here to do, folks. It's time to let the public know the truth so that they can make money as opposed to these institutions making billions every quarter. And by the way, when you see Goldman Sachs not having one losing day in the quarter of trading, I mean, you think that's normal? You think that's reality? Or do you think there's some sort of little game being played there so they can ensure themselves profits while the average investor has a hard time making money? I mean, it's simple, but brings me back to kind of understanding the angle of how these institutions work. And I still remember, Nick, I don't know if you remember this. This is before, right when we were starting in themoneystocks.com, probably 2006. We were trading out of New York, Long Island. And I remember the gold. There was something, I don't know if you recall this, but gold was doing something. And you were like, listen, these guys are stuck in gold, so it's got to go up so they can get out or something like that. You remember that by any chance?
Yes, I do. It was actually when Hank Paulson first became the new Treasury Secretary. And I said, watch gold drop right here. I said, there's a lot going on in the Japanese commodity market right now, and Goldman is upside down on the gold position. And sure enough, gold, I believe it was about 100-point, 200-point, 300-point correction in gold. I don't have the chart in front of me to get the exact numbers, but yeah, we had pointed that out, and I said, watch gold. And we actually just saw it on the chart. And then when I had made a few phone calls to some friends of mine, and they said, oh, yeah, there's a lot going on here in the Japanese commodity exchange. The JCOM, and sure enough, gold tumbled at that stage.
Yeah, and it's important to understand here that Hank Paulson, who had just become the key he was the at that point, what was Hank Paulson was
he was the CEO of Goldman Sachs.
Right. He was the CEO of Goldman Sachs, and then he had just gotten into the government role. So the fact that Goldman was underwater in this, and here comes a Goldman guy into a key role in the government, and then you just put the kind of the dots in a row and connect them. It's kind of obvious there what was going on. So it just goes to show you that this type of game stuff will be played. But I think it's important. I think Nick and I would both make this point: is that it doesn't mean you can't make money in the market. In fact, you can make crazy amounts of money in the market. You just need to know these things. You need to connect the dots on your own and say, okay, listen, a major player in Goldman is now going into the government. Goldman has a position here, and they're underwater. What do you think is likely going to happen? Connect the dots, put yourself on that side of the trade with them, and you'll make money. Right?
Yeah, we don't care. This stuff has gone on from the beginning of time. It will go on till the end of time. You just have to get educated in the markets, and you have to understand what is happening each and every day, the dynamics that move markets, and these are just some of them.
Yeah, absolutely. So on that note, folks, let's take a quick commercial break here. And it's really a pleasure to be here with my business partner, Chief Market Strategist Nicholas Santiago. And we'll come back. We're going to give you more awesome information. We'll go over some new charts. And again, this is In the Money Stock Market Action on 820 AM News Talk Radio.
Here's Gareth Soloway with more In the Money Stock Market Action on AM 820 News.
All right, everyone. Welcome back. Great to be with you here again on this Sunday. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, and I'm joined today by Nicholas Santiago, my business partner, and also the Chief Market Strategist at InTheMoneyStocks.com. So what I want to do here is just give out the call-in number. Anyone has a question on a stock that they've been looking at, we're more than happy to answer it here. 866-977-4820. That's 866-977-4820. Give us a call if you have something you want to make a comment on. If you have a stock for us to look at, we're more than happy to take a look at it. All right. What we're going to do now, folks, is get into a little bit about IPOs, all right, initial public offerings. Nick has a lot to tell us about what's going on in that market right now. I'm fascinated to hear what he has to say. So let's hear from him. Nick, what do you have for us?
Well, right now we have about 25 IPOs looking to come public by the end of April. So just think about it. Last week before that, we had Zoe's Kitchen, Grubhub, Candy Crush, Ally Financial. Now, half the IPOs that have been released lately have been what we call flops, meaning they're priced at a certain level and they close lower than that price that was offered to the public the same day. And this is very reminiscent of something that we've seen in 2000, something that we've seen in 2007. Now, if you go back and you look at some of the IPOs coming out right now, the market is getting flooded with biotech IPOs, and they're also getting flooded with cloud computing IPOs. This is telling us something. If they're going to flood the market with liquidity, who are they selling this to? Who is going to be the guy holding the bag on these IPOs? Well, unfortunately, it's you. It's the public.
So it's like a hot potato, basically. Like, you know, they know it's getting ready to end, and they want to pass that off as soon as possible.
Yeah, and Gareth, if you remember, and we could talk about this a little bit, I guess, in detail with the audience. Remember back in 2007, I said, Gareth, they're pushing this Blackstone IPO to come out. They're pushing this.
Didn't they up the date on that? It was originally coming out later on, and they like, oh, we got to get this out right away.
They got it out in June. It wasn't supposed to come out until September, October. And they pushed it out in June, and I said, this is it. This is the top. We're going to have we're just months away. And that IPO opened up at $36 a share. You go back and look at your charts. It still hasn't traded at $36 a share, despite the run we had in 2013 and early in 2014.
Wow.
So the stock is still well below that $36 a share level. But my point is that was all the rage, that stock. That stock was the hottest IPO, had the most notoriety. Well, guess what's coming out with a ton of notoriety now?
Which one?
Stock called Alibaba.
Oh, yes.
There's that, and it's coming right at a market peak, and it's just so reminiscent that here we are, just a few years later. The stock market's hot as can be. People are just jumping in, hands over fist, and next thing you know, we have the Alibaba IPO, and I think this is very, very problematic going forward.
Nick, do you think that they could? I mean, there's so many IPOs coming out. We've seen a bunch of flops. Do you think they'll try to support? I mean, a lot of these underwriting firms are the Goldmans, the JPMs, and so forth. Could they possibly try to support the market to let these IPOs out before they really tank it even more?
They generally can, but not under these conditions where you have so much distribution. In fact, there were 5 IPOs, I believe, last week that said, hey, we're not going to come public. And they just panicked and pulled it off. So they went away, and they're going to try in a week or two to come public. So normally the institutions can go in there and defend stock. They can go in there and try to defend it for a little while. But when you're coming under distribution the way we have recently, with the volume picking up so much, there's really no way they can do it.
Interesting. Now these IPOs that are coming out, I mean, is there some way for the investor to make money, or you just stay away? I mean, what do you advise in that regard?
Well, to be honest, you really should just stay away. There's not much you could do with it because a lot of these stocks you cannot short them for about 30 days, and that makes it a little bit tough. If we could short these IPOs, I mean, we would be cleaning up right now because every one we look at, we know is going to be a flop, basically. I mean, there's very, very few that are not going to flop at this time. So when you just see this mad rush, this mass exodus to get to the public market, it's a very, very negative sign for stocks.
And I think it's important to remember, guys, it's so interesting how this perception to the public is so different than what reality truly is. So I want to make this clear. I mean, we all know, they use the term IPO, initial public offering. I mean, it sounds all sexy and everything like that. But really what's happening is people that are running that firm are selling it. They're getting out of it. Now, I mean, if that firm was going to be worth 100 times what it was last year, do you really think they'd want to get out of it that quickly? I mean, I'm not sure if that's the case. So just keep that in mind, is that, it's really the hot potato getting past the average investor. But, hey, let's call it an IPO and make it all sound all sexy and so forth. So, I mean, it's kind of weird like that,
Well, it's a company looking to raise capital because they don't have enough.
Right, exactly. And I mean, not to say that all IPOs you can't be long, but you have to, I think, Nick, and you probably agree with this, is look at the type of market you're in. I mean, there are types of markets where any IPO, it could be like a .com back in '99, comes public and it's going to go up 500%. But this is where that intelligence side for the small investor comes into play. You have to understand the type of market, and is it a market where a bunch of IPOs are being pushed out? Well, maybe you should be more careful then, right?
Sure, absolutely. I mean, when you start to see, just if these IPOs like Grubhub or Candy Crush were to come out, say, 2 months earlier, they would have been like darlings of the market. Mm-hmm. But the reality of it is they're coming out now in a mass exodus with so many other IPOs. The institutions are saying there's something wrong here. We can't support all these stocks at once, and they fall.
I think it's important here, and we don't have much time left, but in the first half of the show. But I think it's important to understand that this is why Nick and I don't believe in fundamentals very much, because an IPO could be the greatest thing since sliced bread in the right market, and that has nothing to do with valuation. It could be totally off of valuation, but in the wrong market, it can go down. So the valuation has no regard there. It's the time of the market. It's timing. It comes out, right? I
agree 100%.
Yeah. So what else do you have? You have about 30 seconds or so left. Yeah. Any major points? We can pick this up when we come back too.
Sure. Well, basically, anytime you have a central bank around, all the central banks flooding the market with liquidity, and there's IPOs coming out and the stock market goes down, put two and two together, that's a problem.
Absolutely, guys. So first half of the show is going to be coming to a close here. It's been an awesome half of the show, and we're going to come back and give you even more awesome analysis on the market. My name, Gareth Soloway. I'm with my business partner, Nicholas Santiago. We are Chief Market Strategist at InTheMoneyStocks.com, and we'll be right back here on In the Money Stock Market Action on 820 AM News Talk Radio.
Now back to In the Money Stock Market Action on AM 820 News. Here's Gareth Soloway.
All right, we're back here, second half of the show, ready to rock and roll. Again, I'm joined by Nicholas Santiago, Chief Market Strategist at InTheMoneyStocks.com, my business partner. My name, Gareth Soloway, also Chief Market Strategist at InTheMoneyStocks.com. So one thing I want to do just before we get into some more analysis is make the big announcement, and everyone, well, maybe not everyone, but we know we put a lot of heart and soul into this, but our new website, InTheMoneyStocks.com, did launch, and I think we'd encourage you to go check it out. It is an amazing new product out there. The website itself has so many avenues where you can go on and just do so many different things, including joining the research center, which is where we give out our exact entries, our exact exits, all our trade alerts, and you get them, and we have a text message and email service that will alert you immediately if we buy or sell something. And I think, again, if you go check out that new website, there's how to use the website videos all over there. We have every product that you can imagine on there that will help you become a profitable trader. And I'm telling you guys, we put a lot of work into this, and it's an amazing feat, and I do hope you go check it out. And I want to just make something clear here. If one of you guys that are listening call in or email in to the show right now, all right, and again, I'm talking about the call or email, the website, 212-380-1578 is the number there. Or if you email support in the next, before the show ends, we'll say. So in the next 30 minutes, we'll extend a free trial for you out an extra week. All right, so that means instead of 1 week, you'll get 2 weeks, but you must have a Florida address, all right? This has to be a Florida person listening in the Tampa Bay area. That's what we're going for here. Local people. We want to get you guys involved here since this is where Nick and I reside at this point. So we hope you do that. Take advantage of it. I mean, there's money to be made. We hope you step up and start making it with us. All right, let's get into some other stuff here, folks. In regards to the market, Nick, what are you thinking about this coming week? I mean, what are we looking at?
Well, I think we could see a little bit of a downdraft tomorrow, but then around Tuesday, the markets may try to find a little bit of support. We're coming into a holiday week. Passover begins on Tuesday. Then you go into the Good Friday holiday. The markets will be closed this coming Friday, which I believe is April 18th. And generally, the volume trends will get a little bit lighter. Lighter volume may help the markets this week stay buoyant. But I don't really see tons of upside. I don't see there's still a lot of stocks like Pandora, as we mentioned, that still have downside to go. They're not going to bottom or find a decent support level till around Pandora in particular to around the 2265, 2260 level. So, there are still stocks out there that have further downside. So tomorrow, which is a Monday, start of the week, you want to be a little bit careful, especially going into a nice downdraft. But Tuesday, I think the market may find some equilibrium, but it's a time to be cautious and a time to only take really, really good trades. As you know, Gareth, last week you put out some long positions right in the midst of a major correction, and we had talked about it at night, and I said, all right, this thing shouldn't last too long, but those are great levels. Let's see if we get these bounces, and then we'll short. And we held our main shorts, added some shorts, took the longs. I mean, and that's what a pro trader does. And again, I encourage everybody to come learn the PPT methodology.
Yeah, and you don't have to be behind your desk, 24/7 on the computer to do this too. The swing trading is something where you kind of set your level in your investing, whatever it's Scott Trade or E-Trade or Ameritrade, and then you can kind of forget it. And then once you're filled, you put in your targets and you can walk away. And if we update something, we send out an alert. You can log in and change it, so you don't have to be behind your computer 24/7. I think that's a major kind of thing that most people don't realize. I got to be, if I'm going to be in and out of stocks, I got to be there and always watching. You don't have to be. So I think that's the important factor there. Now, I think in a perfect world, I think for myself, I would love to see that big flush on Monday, kind of this panic over into Monday. And then there are some levels on different stocks that maybe Monday into Tuesday we could get. And I agree. I think you got the holiday coming up. You have a lot of levels coming up on various stocks. I mean, we were talking about Pandora at 22.5. I mean, the stock's only trading around 25 and change, and we've seen it go down as much as $3 in one day. So, I mean, really by Tuesday, it could even hit that level.
Yeah, absolutely. I mean, there are a lot of equities right now that are nearing decent support levels for bounces. The big news is that the market has gone down on volume, and that ultimately tells you the trend is shifting now to the downside. But that doesn't mean we don't play the bounces. Once you learn the methodology and what we do it in the money stocks, we don't really care about the trend very often. As long as we have enough reasons for owning a stock and enough reasons for shorting it, we're going to take that trade.
Yeah, I think that's important. I mean, a lot of people will say always the trend is your friend, and that's true in the middle of a move, but not at the top of a move or at the bottom of a move, and you can really get hurt. I mean, take a look at the biotech index, the IBB. I think it's down in the last 2 months 22%, and that's an index, folks. I mean, this is taking all the biotechs into account, and to see it down 22% in that short a time, I mean, imagine being the trend is your friend and being at the top there. I mean, you're down almost a quarter of your money.
Now, talking about the biotech index, if you take a look at the iShares NASDAQ Biotechnology ETF, the IBB, that gets to $200. We're all over it. We are buying that at $200, $201, $202. We are buying that. So, that can drop to that level maybe Monday.
Yeah, absolutely. I mean, it was down alone 6.5 on Friday. So, I mean, it could easily dump out there. It actually closed below the 200 moving average on Friday. And that's actually right on my list today to be a watch and one of the major potential plays this week. So I think that there are opportunities out there, especially, Nick and I always tell you guys, into holidays, oftentimes you'll get a little bit of a bounce because volume will dry up. A lot of the big selling traders, the institutional players, they'll step aside to go away with their families for an extra day or two. And that takes that selling pressure away from the markets. And if you have, again, it's not to say that you buy just because of that. You need to look at the chart and say, all right, listen, we have a 200 moving average. We have a gap fill. We have a double bottom. We have some sort of multiple signal support saying this should bounce. And then you add the light volume of a holiday in, and you get a good situation there. So there are some big ones. We'll talk a little bit about that more, some trade ideas later. But I just wanted to mention to Nick here and see his thoughts on, I've been hearing more and more about Russia's still starting to encroach. We've seen a lot of, in fact, I just read that someone was killed or some shots were fired in Ukraine, and there's been some killings going on there. In fact, right here, 1 killed, many wounded after shooting breaks out between Ukraine special forces and pro-Russia separatists. So, I mean, we've seen this for a long time. I feel like the market kind of ignores it at this stage, but if it really gets bigger into a bigger conflict, you think the market will care?
Yeah, I do think the market will care. I think it's already starting to show up in the energy markets. And right now, crude oil is regaining strength. You're seeing gasoline at the pump. Natural gas has been somewhat stable. But oil itself, I mean, Russia is very, very important to the European energy source. So I think it's going to escalate. War cycles are telling me we're going to have more headaches and problems, and you're going to see this is going to get worse.
I'm just reading another interesting headline here from a website called Zero Hedge, and this is actually a pretty good website. I think both Nick and I do enjoy looking at it. Sometimes you got to take it with a grain of salt, but overall, I think it has some very, very
don't
good
trade off of it.
Yeah, right. Obviously, don't trade off of it. But in terms of headlines, it's kind of the site brings to us the headlines that aren't necessarily brought to the public from the normal media outlets. So it's important for us. I think the media has an agenda to make sure that they push certain stories out there and keep other stories behind closed doors. And this site actually is a good one to kind of bring that other stuff out. So I see here, high-frequency trading purge begins. SEC prepares to remove some high-frequency trading firms. Now, Nick, a lot of bad rap to high-frequency trading lately. I think that's different than what I've been saying in terms of the game that the institutions play. The games that the institutions have played have gone on forever. They're the ones where they try to pump the small investor up to buy at the highs and sell at the lows. But here, high-frequency trading is where a trading program is going to trade pennies back and forth in a stock very, very quickly. I mean, is that something that is really that bad, or is this more the market going at something or the SEC going at something just to make a name for themselves and because the public is kind of hearing the name out there?
Yeah, I mean, I don't think it really affects us that much. I know it gets a lot of bad publicity, but high-frequency trading has allowed us as traders, individual traders, independent traders, to have low commissions. I mean, you know, we trade computer to computer using a level 2 system. It really doesn't seem to have affected us, at least something that I don't know. I mean, but if you get two high-frequency trading firms and they're trying to beat each other out for one 1/1000th of a penny a million times a day, that's their problem. Let them go battle that out. It seems like, for me personally, I don't think it's really affected us. The solution is very simple. Just slow the programs down so that everybody can go at equal speed, which is still super, super fast.
Right.
And that levels the playing field for those guys. I mean, this is what it's coming down to. But I never want to go back to fractions, the way stocks used to be traded. I always want to stay with the decimals. I think that's the best way. And, liquidity in the system is a good thing, in my opinion.
Yeah, I mean, having a penny spread on a stock where you're buying and selling for only a penny difference instead of a quarter point,
huge.
It's, especially as a day trader and even as a swing trader when you're not looking for the huge gains, but you're taking 5%. I mean, that can be a big difference to your profit margin right there. So I agree with that. I think what they need to do is not take them away 100%, but just slow them down. So, I mean, for instance, we hear a lot of this stuff about, if you, what was that? Weren't we talking about this a couple of weeks ago about someone who bought a office space?
They bought some real estate on the top of a Manhattan roof, about 20 square feet, so that they could be closer to the satellite dish and beam down their high-frequency trading program quicker. I mean, it's absurd, but
yeah.
It cost them $25,000-$30,000 a month to rent that small area on top of a roof. But this is how it's become, because it becomes so profitable for them.
Not billions of dollars. Yeah. I mean, so I think that's the key, is that, you just got to put everyone on an equal playing field. Although I will say this, and listen, we should always be on an equal playing field, and knowledge and experience is what should be the key factor, not how fast you get an internet feed and news from an exchange because you have a faster internet connection or you locate your building somewhere else. But I think it's important for us as investors, and this isn't an excuse, I want to make that clear, but it's important for us, our investors, to understand that this has been happening for centuries, right, Nick? I mean, there's always people that are going to get the news faster than everyone else, right?
Listen, back in the day, the Rothschilds used to get the news faster than everybody else, and people even just a few months ago, right? The news would come out of the Federal Reserve or somewhere, and it would go to XYZ, and they would shoot the news over to somebody else faster. Mm-hmm. So this same front-running style of action has been taking place for centuries.
Right, and I don't want people to think we're saying it's right. It's not right at all. It needs to be fixed. But I don't want people to think it's all of a sudden something brand new. It's been around for a long time, and of course it needs fixing. But as weird as it sounds, there's always going to be some way for them to do it. They're going to figure out a way, because where there's billions of dollars on the line, they're going to figure it out. And I think the important factor is that the high frequency trading itself is not really affecting the individual investor too much. In fact, probably lowering commissions overall quite a bit, which has been a help. I mean, those of us that invested back in before my time, even in the 70s and the 60s. I mean, what were you paying on a trade back then? I mean, even when you were a broker, what were you? What were the types of commissions? I mean,
I don't. When I was a broker, I don't even think I've ever charged less than $200, and that was if the client lost money.
Yeah, I mean, I think it's important to recognize that it's like it's brought these commissions to the point where you can do it for. I mean, I pay now I think $4 a trade or $5 a trade for my trades in and out, and I mean that's a pretty spectacular price, and it allows me as a trader as well as a swing trader to be much more profitable on an individual basis. I'm not part of a hedge fund. I'm not part of anything big. I'm just doing it for myself, and it has helped me. So that's good stuff there. Now, going back to a couple other things, I'm just trying to see what else is going on. Have you heard anything about the Bundy Ranch and what was going on there, or not too much?
No, but I'll tell you what. I don't know a lot about it, but I will say this. I did go back and look at some prior cycles, and I think a lot of any of the in-the-money stocks methodology students are listening. They could probably do a nice cycle work on that ranch, and with the Waco, Texas Branch Davidian occurrence that happened some years ago, a little bit over 20 years ago. So
yeah, it's amazing with the cycle stuff, and Nick's an expert in that field, and he's brought us major pivot highs in the market and cycle tops as well as cycle lows, and it's all done by this cycle analysis, which I don't even know where to start in explaining to members. Can you briefly explain how you go about deciphering a cycle, or using the stars, the moon, what's going on there?
Well, basically, you don't have to do any of that. What you really need to do is go back and look at past events. And then you try to correlate where past events happen and repeat. And once you find those certain cycles, you'll have a tendency to look at the future. And you could say, well, this is a time where something could happen. Unfortunately, a lot of the cycles that I've come up with throughout the years have matched up with earthquakes and volcanoes and tsunamis, and unfortunately that has happened, but that was more or less using lunar cycle techniques and astro cycle techniques. But you could just go back and look at the markets throughout history, and you'll see how these things just have a tendency to repeat.
I think something that I mentioned earlier on, and for those of you that have been longtime listeners now, and long time being since January, since we started the show, but I think one of the things I said, and I remember saying this for multiple weeks in a row and talking about it almost every week, is that if you map out from 1999 to the top in 07, or 2000 to the top in 07, and then you map out from there to the current period, there is something that you will notice there. And again, we can't divulge too much about that because it's important methodology and stuff. But I don't know if you could speak on that a little bit more.
Yeah, it just goes back to the point of finding what has happened before and then replicating not only price but replicating time. And when you could put those two factors together, you do find many important turning points. I mean, just look at what we did in 2007 when we launched this company. Really put this company on the map. We were featured in magazines, and people were writing about us and talking about us. It was just simply cycles that took us to where we needed to be, and helped a lot of people, and we made a lot of money.
Yeah, absolutely. It's amazing how looking at history, and you just don't necessarily want to go by strictly that to make your judgment call, but if you put the pieces of the puzzle together, like I still remember, and I mean, it's great to be able to look back and see the pullback, for instance, in the NASDAQ at this point, or the biotech sector, and not the S&P is still relatively near its highs, so we can't necessarily say that that's a huge drop yet, although we do think that's coming. But I mean, I remember distinctly talking about how the margin level in the market was at all-time highs, even higher than 2007. And the last time it peaked was in 2007. The previous time it peaked was in 2000. And margin is the amount of money that the small investor was borrowing to buy stocks. So when you're borrowing money to buy stocks, it's because you're overly bullish and you think you can't lose. Otherwise, you wouldn't borrow money because you got to pay that money back with interest. So, I mean, those signals like that, combined with the distribution, combined with the IPOs that were all being pushed out, I mean, we could go on and on probably about that.
Yeah, and another thing, Gareth, a great point, but the same effects happened back in 2000, 2007 where the high flyers started to just crater. I mean, we're looking at stocks like Priceline that have just been taken to the woodshed. Now, I don't even really talk about Priceline, or you have a stock like Amazon, which, really doesn't make a lot of money, but everybody's in love with the company, and I think it's a great website. But the reality of it is, as a trader, you have to be a little bit cautious when the PE ratio, and we don't even use fundamentals, but I mean, it's just at some ridiculous number, and these stocks start to fall off. So there's so many equities, leading equities. When leading equities, and it doesn't matter if it's Buffalo Wild Wings or Priceline, when you start to see leading equities start to drop off, Chipotle Mexican Grill is a good example. When these stocks start to fall and they fall sharply, it is the market's way of talking to you, and I think you need to pay attention to it.
And I think, one thing I discussed in the previous 2 episodes of this show, In the Money Stock Market Action, and again, my name, Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, and I'm with my business partner, Chief Market Strategist Nicholas Santiago. One thing I talked about in the previous couple episodes was that rotation of capital where you saw the high flyers starting to come in, and that's a warning signal, because what that's telling you is that the investors, and really the institutions more than anything, but everyone overall is lowering their risk. All right, the Pricelines, the Netflix, the Amazons, those are the ones you buy in a crazy bull market because they're going to go up the most. But when those start to crater, like the IBB, which was kind of in bubble territory in all fairness, I mean, it's telling you something, and you have to be able to read that. And as an individual investor, I mean, this is what shows us that you don't even have to be a genius to do this type of stuff. You just have to look at things and think logically and say, okay, listen, IBB down 22%. There's got to be something there that's telling me here that people are running for cover, and maybe I should just be a little bit more careful. It's always better, and I think Nick would 100% agree, is that isn't it better to be safer than just take risk, right? I mean, you'd rather not make money than lose money, right?
Oh, absolutely. And what happens to a lot of people, especially after you've had this type of market run, is that they get a gambler's type mentality and not a trader's type mentality. We as traders want to be in stocks all the time as well, but we want to do it when we have the odds in our favor. It just surprises me how often people are willing to jump in a stock on a tip, on some type of market pundit or market some talking head in the media saying something about a stock, and they jump right in head over heels. Meanwhile, they mark a dead top in the stock, or it's just amazing, the gambler's mentality that is out here. You don't want to be a gambler. I'd rather be Steve Wynn than be the guy sitting at the other side of the crap table looking for a free drink.
Absolutely. That is the truth. And that's as a smart investor, just educating yourself, folks, that's what you become. And I always talk to our members about it in the Intraday Stock Chat or the Research Center and just say, hey, listen, if you become a good enough investor, you're the house. You're the one that will, you'll take a loss here and there because no one's 100% perfect, but you'll make a money majority of the time consistently. You'll become the house. And again, we're going to take a quick break here and we'll come back and discuss more on this. But just to give you a heads up, this is In the Money Stock Market Action on 820 AM News Talk Radio. My name is Gareth Soloway, and I'm with my business partner, Chief Market Strategist Nicholas Santiago. We'll be right back, folks.
Here's Gareth Soloway with more In the Money Stock Market Action on AM 820 News.
We are back here for the final few minutes, and we're going to give you guys the best information of the entire show. What levels on stocks to buy, where do we want to get in, where do we want to get out, and we're going to get into that in 1 second. I just want to, before we get into that, remind you to go check out our new website, InTheMoneyStocks.com. And what I want to tell you, if you go on InTheMoneyStocks.com, and I'm going to click on it right now. I got the computer in front of me here. And if you go to InTheMoneyStocks.com right now, you're going to bring up our brand new website. And if you go under Free Market Action, you can see our Research Center track record. And if you click on that and bring up our track record, these are our exact trades that we've given to our Research Center members this year. And you can scroll back to last year, too, and you can drop in the drop down. But this year alone, net gain, and we're only in April, by the way, 3.5 months in, and we're talking 146.47% gain. That's a net gain. So if you add up all the winners percentage-wise and all the losers and subtract the losers from the winners, 146.47%. Now, that would be if you put in all the money you have into each play. We never recommend that. What we do is we take 10% of your account, or what our accounts essentially, that's what we recommend, and you put that in. And even if you did that, check this out, you have a 14.6% return. And that's in a market that is flat to down on the year. I mean, this is there's no hedge funds doing this, right, Nick? I mean, there's no one out there.
No, in fact, the NASDAQ is down, roughly, I think, 8% right now. So
amazing stuff. All right, let's get in on our last 5 minutes or so, 4 minutes of the show. Nick, what stocks would you think are worth taking a look at this week, and do you have a level on a couple of them?
Yes, I do. We already talked about that Pandora level around the 20, what was that, 2250, 2260. Yeah. But JP Morgan, watch this around $53. Gets down to around $53. I think you'll get a bounce. And also the IBB, when that hits 201, 202, if you're gutsy enough, you could step up, use basically about a 5% stop loss from entry. But that should give you a pretty nice bounce, perhaps about 7 to 10 points pretty quickly.
And for those of you that are newer to the swing trading environment and doing swing trades, what we always recommend too is start out light. There's no reason to buy a lot of shares, and I think Nick would agree is that to get your feet wet, to dip your toe in, do 50 shares, do 20 shares, and at least see how it goes. And once you gain confidence and understanding of how to trade and you learn the methodology, that's where you start to inch up your share size. But there's no sense. It's like someone coming to you and giving you a hot stock tip. You never take it right away. We always suggest making it prove itself to you, and then you start trusting it, all right? And I think you'd agree, right?
100%. That's why I always encourage everybody to learn the methodology, because then you'll know on your own. You won't even need us anymore. We have traders that are now have quit their jobs. I mean, probably dozens, if not hundreds, that have actually left their 9-to-5 job and are now just full-time traders. So
yeah, in fact, on the new website, we just launched the Elite Roundtable, which takes the 6 top traders that Nick and I have trained over the last 7 years, and we gave them their own service. And these guys are awesome. They are experts at this point, and they're going to be putting out extra calls and extra levels and writing articles. And again, this is a growing movement of traders and investors who are now free from the tyranny of the institutions, free from all that nonsense out there, all that hype, and are now making money because they've learned how to read the charts correctly. And again, none of us are IQs of 500 by any stretch. I mean, I'm about as average as they come, but you just have an open mind and you learn how to do it, right, Nick?
Absolutely. And you'll be surprised if you look at something and study something for so many years. I've been in this business over 20 years. That's a long time. I can't do anything else. I mean, I have to buy my wife a hammer because I don't even know how to put a picture on the wall. I break my my thumb. So again, it's a lot of hard work. We've been doing this for a long, long time. And just come learn. I can't tell you, it's amazing that people don't want to learn about finance, but what else is there? I mean, it's your money.
It's your money. Why not treat it right? So now I have a level here on Amazon. Everyone's always talking about Amazon, and this is just a bounce level, guys. But I would say if it gets below 300, you start to dabble a little bit with it, and you ideally want to see that. I would say Monday or Tuesday. Right now it's trading at 312. I would say if it flushes below that even number of 300, starts to get into a little bit of a level. There's also a 280 level, but I think considering the holiday, you'll probably get a bounce first. But don't get greedy. Look for that 5% to 10% gain area. Take it and just run with it. All right. So again, Amazon's a good one. Another one I have for you guys is I was looking at Yelp, actually. Yelp, that's a stock we don't talk about often, but Yelp is yelping right now for sure. And I would say right around the 50 even number break to 49 starts to get very interesting. All right, Nick, you have one last one before we head off today?
I'm good, Gareth, right now. I think we're going to see what Monday gives us, and we'll see if we have a gift on Tuesday.
All right, excellent, guys. And again, just to go over things for this week, start to expect a little bit of continued downside. Overall, remember, the market will continue to go down, but we think, Monday, Tuesday, you start putting in a little bit of a low. And again, my name, Gareth Soloway. This is In the Money Stock Market Action. Thank you for being here today, Nick. And this is my partner, Chief Market Strategist Nicholas Santiago. And this is 820 AM News Talk Radio. Have a great weekend, guys. Talk to you later.